Yo, what's going on, traders? Good morning. Welcome to another episode of Market Mornings. I'm your host, Jay Reed. Yeah, man, this is for all my dreamers, dream chasers, market movers, people trying to get off the 9 to 5, supplement the 9 to 5, get out of corporate America, whatever you're trying to do, man. We're just trying to be your go-to spot for all your morning market updates and relevant news financially. But first, a quick disclaimer, I am not a financial advisor. This stream is for educational and entertainment purposes only. Make sure you consult with a financial advisor before you make any financial moves. Again, you may hear me mention some affiliate links. These are just people that I'm hooked up with. No pressure at all to do any purchases or anything, which is a quick way to support the stream and allow me to do things like upgrade the stream, provide you better sound, more time, more insight, more analysis. And that's all I'm here for, man. And I just want to say I appreciate you guys. Today's sound is brought to you by Ice David Beats. Check him out on YouTube. The link is in the description below. And let's get into it, man. To give you your dose of morning motivation, we got gold shining, tech flexing, banks battling, and some real smoke may be building between China and US. So let's lock in. As always, we're going to give you a quick market landscape. We got the S&P 500 futures are up 0.4%. NASDAQ futures are up 0.5%. The 10 years up a little bit. And that's a good thing to 4.02. The dollar is down a little bit. We'll talk more about that. U.S. crude oil is up 0.4%. And gold, the story of the week, coming in at 41.96, down a little bit from crossing the 4,200 mark. But over the week, it's up 5%. Yes. So let's get into the 5 top headlines of the week. Of the day. Again, like I said, gold is the story of the week. Gold climbs to a record on U.S.-China tensions and Fed rate cut bets. Gold is on a historic run, flying past 4,200 as demand explodes from central banks in Asia and inflation-fearful investors. And then you got Japan's largest bullion retailer just suspended sales on small bars. Meanwhile, silver is close behind, with strong cultural and institutional demand creating supply stresses. Like they talked about yesterday, people that are buying silver bars over there because it's cheaper. A lot of people don't have, $4,200 an ounce to buy gold, but they can do it with silver. But they're flying it from over there, paying whatever that costs, and trading it in and getting that premium. Gold is the name of the game right now, and that usually is for all my hedge bettors. AI, boom or bubble? I don't know, man. Drop your comments below. Tell me what you think. But Taiwan Semiconductors upgraded its revenue forecast, helping fuel tech optimism. But a wave of circular deals, meaning they're just trading dollars, not creating any new revenue, between NVIDIA and OpenAI are raising red flags about whether AI is boom or bust. Is this a little too good to be true? I don't know. So basically they're saying that, they're not creating any revenue. They're just trading dollars. So it's like, if we're in the house and we're just passing money, it circulates in here, but is that creating any wealth for me? I don't know. So that's a story you might want to check out there. And then we have, like I said, Taiwan Semiconductors raises outlook in vote of confidence for AI megatrend. Taiwan Semiconductors, they raised their net income better than the anticipated 39% jump. And this is the lower end of its capital spending target for the year, at least 40 billion for so they're increasing these capital spending budgets, but again, we don't know if it's new revenue or not. Like, is it, I don't know. It's just confusing right now. So continue to watch that story. And then, like I said, China and U.S. trade tension still simmering. And it was boiling. So if it's simmering, it's still boiling. But, the U.S. is dangling the possibility of a tariff pause. But that's only if China drops its rare earth export limits. Cut out the BS, is what they saying. High stakes. It's a high stake chess game we're playing, and that's ahead of the potential Trump and Xi meeting. So they're basically just jockeying for leverage for this meeting that's coming up. And Bassett floats longer term U.S. truce after the rare earths like gambit battle that they got going on. Bassett said the possibility of extending a pause, the 90 days pause that they had is coming up in November. And I think that's what a lot of this back and forth is about. But the tension's still there. Critical minerals was the trade. As you can see, critical metals is down 24%, MP is down 8%, and U.S. rare earth is down 10%. This is based on a possible truce coming out. So, we'll see how that plays out. But right now, those trades may need to put them on the back burner. You may have missed that boat. Nestlé rallies on a cut plus strong sales, but Nestlé, they're up 8%, and that's after stronger than expected earnings, right? But that comes with a cost of 16,000 jobs. The new CEO is he ramps up speed of his turnaround. He can't wait. He's got obligations to meet. So Nestlé is they're cutting 16,000 jobs, and this is going to be over a 2-year period, I believe. So by the end of 2027, and that's going to come with their come in line with their target of 3 billion US francs of cost savings. So continue to watch that. And last but not least, the credit markets in chaos. Jamie Dimon says, and this is a battle between traditional credit and private credit. And Jamie Dimon tried them. He said, if you see one roach, I don't know if you ever been in somebody's house that got roaches. You see that one roach, it's probably 1,000 roaches behind the walls. So don't eat that. But anyways, Jamie Dimon says, like I said, he said if you see one roach, you probably got 1,000 roaches. And he's, maybe suggesting that there are more pain to be coming in the credit markets. Private credit players fire back. They said banks, non-bank lenders, you basically distress the debit firms, and you're pointing fingers, but you don't really have anything to back it up with. So they're going back and forth. And this is Jamie Dimon and who is with JP Morgan Chase, and Mark Lipschultz, who is with Blue Owl Capital. They've exchanged these comments suggesting that private credit firms may be vulnerable, and if they're vulnerable, they're gonna screw us all up. And basically, I guess maybe the thought pattern is that private credit aren't doing their due diligence on who they lend money to, and I think it's a higher risk, if I'm not mistaken. They may lose because they're not getting any equity or any collateral, so it could be 100% loss for them. And if those losses start to stack up and create some failures there, then it could mess up the credit market. So we'll continue to watch those stories. That's all I have for the five things to know, or five. I want to copy 5 things to know. The 5 stories that are going on that I feel like are relevant. Let's go straight to the charts now. Yes, my chart's up. Gotta make sure I check that. On the move, we got JB Hunt. JB Hunt is up pretty big, pretty significantly. They're up to $1.58 pre-market. They beat earnings by 20% and revenue by a little over 1%. So, those are strong numbers for JB Hunt. And I think that may have been it. It's obviously a surprise. And they're doing some cost control and strong earnings. And like I said, Nestlé's up based on Nestlé. Oh, let's see, Nestlé. I can't find it here, and I'm not gonna waste too much of your time on that. But we already talked about Nestlé. They're up based on job cuts. Then you have Salesforce. What's going on with my keyboard here? Salesforce. It could be me. Salesforce is up also 4.6%, and their forecast doubled on their revenue growth. It hit a slight double top, but I'm not too worried about that. They increased to 246 pre-market. Salesforce posted a gross margin of 77% and an operating margin of 33%, showcasing strong cost management compared to other AI firms like OpenAI, which has a gross margin of 42%. So they're looking good. They're looking like they know what they're doing. Hewlett Packard's getting sued, I believe, and they missed their forecasts. Hewlett Packard expects fiscal 2026 revenue growth of 5 to 10%. That's down from the forecast of 17%. So their shares fell on that. A group of U.S. states, including Colorado, aims to block Hewlett Packard's Enterprise's $14 billion purchase of Juniper Networks, citing concerns over settlement transparency and lobbyist influence. So they probably had this revenue from Juniper included in their forecast. So them, taking that out, people like, hey man, I'm good. I'm good on you. Neo's down 6.7%. No, they're also getting sued by Singapore Wealth Fund. And let me see. The sovereign fund claimed in a legal complaint that Chinese electric car maker inflated revenue by selling batteries to a related party. The stock fell 9%. Even though Neo denied similar allegations before, it cast a harsh light on. So, basically, you fooled me once. Hey, it might be me. Now you do the same allegations coming up. So now I'm starting to put some truth to it. So those are your market movers that I have for this morning. Now we're going to get into Reed's playbook. This is my weekly playbook. These are stocks that I feel or sectors that I feel like are going to break out this over the next couple weeks. But you got to have an offensive playbook as well as a defensive playbook. So let's go with my offensive playbook first, and that's going to be your gold miners. You got GDX, not Kendrick's album, but the ETF, Van Eck Gold Miners, and it's up as well to pre-market. Then you got NEM, Newmont Corporation. They're a precious metals company. They're up to $95 pre-market. So all these stocks are going to be riding the momentum, and then you obviously have the gold commodity. If you have enough money to buy that, go ahead and do so. But I just laid out some ETFs and funds that you can jump into. Semiconductors. The AI optimism plus strong earnings leads me to include these in my offensive playbook. So you have SOX, that's an iShares ETF. They're up pre-market as well, coming off of a double top. So there's a target down here, so you may want to wait till that cools off a little bit before you jump into it, but it's definitely in my offensive playbook. Then of course Nvidia. I suggest never selling NVIDIA, but again, I'm not a financial advisor. That's just what I'm gonna do. And they are, they're doing their thing. They're at pre-market as well, but they're the leaders. And then you have ASML. Talked about those guys yesterday. They're up pre-market as well. A little expensive at $1,000.31, but hey, if you got it, spend it. And then now, kind of a surprise, but right in my wheelhouse, freight and logistics companies. Again, JB Hunt, we talked about those guys. They are up pre-market, but they, again, they beat earnings by 20%. That's a surprise. A lot of people felt like the logistics area was going to have a pullback based on, the economy and all that stuff. But it's stuff still moving around. It's got to move around. And then, a lot of these guys, like you got Old Dominion, ODFL, they are up as well pre-market. They got earnings coming up. What else do they have? Freight is maintained at, so they're rated outperformed by Raymond James. Raymond James. Shout out to the boss, Raymond James Stanley. But anyways, so these guys are, and a lot of it may be, if you know anything recently about Yellow going out of business and a lot of their freight LTL business getting spread out. These are probably some of the benefactors of that, and it's taken a while, but now they're showing, their forecasts are up from what they would normally do. And then you have SAIA, last but not least, SAIA, SAIA. They're a logistics company as well, primarily focused in, I believe, LTL, but like drop trailers, stuff like that. They also got earnings coming up. And they're outperformer rated by Raymond James as well. Then of course, luxury goods. Everybody's got to have the Louis, LVHM. I don't care. I can never find this stock, man. It's not coming up on my thing. LVMH. That's why. It's over the counter. Is it over the counter? LVMH. I guess it is OTC. Yeah. It's up. Was it up? This is a real time, regular hours. Yeah. So, it's over the counter. So I don't think it has a pre-market dollar, but yeah, if you can afford that, if you can afford Louis, you can afford this. So to all my people out there buying Louis fresh out the store, you need to buy you some stock before you buy that purse or that hat that costs $7,000. Like, come on, let's just get some of the stock, man. Race, that's Ferrari. Ferrari had a pullback. I can't remember why. It was something going on with them, but to me, when they pull back, we jump on it. You know what I'm saying? And pre-market, they're up. So right now, I think it's at they were trading at $500. Earlier this week, earlier this month. So, they have a pullback. So just jump in, man. I mean, it's, everybody's got to have a race car, an affordable one. Now let's, like I said, if you got to have, a strong offense is good, but defense wins championships. So my defensive plays are of course, first off, utilities. The XLU is the ticker. That's a utility select sector. It's a fund. As you can see, that's up pretty significantly over the last month or so, and it's also up pre-market. And you got NEE. That's Next Era Energy. Energy. Everybody needs energy. All these data centers that they're building, they got to be powered by something. It's not gonna be a windmill. So they're up as well pre-market. And last but not least, you got Duke Energy buying up everything, buying up everybody, expanding fast. They got safe yields. All of these guys have safe yields while bond volatility rises. They got dividends coming out soon as well. So those are my defensive guys in utilities. Then you got consumer staples. Procter and Gamble, PG is the ticker. Procter Gamble's been down lately, but these stocks like this are good to buy when they're down, because they're always gonna go back up, in my opinion. Then you got KO. That's Coca-Cola. Coca-Cola's down as well. They got earnings coming up here soon, so I'm pretty sure they're gonna beat that. They're above the 200 EMA, just crossed it not too long ago. So up a little bit, slightly pre-market, but always a good defensive guy to get into. And last but not least, Costco. In this sector, Costco's pretty much coming in even, but they had a bull wick here over the last few days. Let me see, limited. It's rate. They got a buy rating and a set price of $1,115. So that's $20 from where they are now. So go ahead and jump on that. That premium. Again, I'm not going to go too much into this, but gold and silver, great defensive stock as well as offense. So you got GLD. That's a gold shares thing you can get into. Then you got silver, iShares, SLV, iShares Trust up as well, big. And then PAAS, Pan American Silver Corporation, that's up as well over the last month or so. And then last but not least, as a defense, you got healthcare. J&J, Johnson & Johnson. Johnson & Johnson is up big over the last month. They had earnings, killed the earnings as far as a big company like this. 1.45%, 1% on the revenue. And then you have United Healthcare. We all know United Healthcare has been down, based on, public perception. But not too long ago, as you can see, this stock was trading over $600. Right now they're coming in at $360. So go ahead and participate in that run, because it's gonna come. They're not going anywhere. I think they're the largest healthcare provider in the nation. If they go somewhere, we all done. And then ABBV, ABBV is a ticker. All these guys have steady under macro pressure. So that's going to benefit them. They have dividends coming out announced yesterday at $1.64. So, come on, man. If you got it, jump in it. If you're looking for growth, look for growth in the stock market. Now, of course, you do some day trades, but it's all about stacking the small wins. I'm not saying stay in everything forever, but like I said, have your offensive playbook and a defensive playbook and run them week to week to week. You can't use the same plays every week, because then they gonna figure it out, and then you're gonna lose. They gonna jump on your plays and all that stuff. So just to use a football analogy, and a pro tip, watch how the rates respond watch how the market responds. Watch how rates respond to Powell's next moves. I think Powell is always a big figure. But coming in, finishing out his term, finishing out the year, investors are going to be particularly concerned with what he does. So we could get a big rotation if cuts get priced in even harder than what they are now. So I think that's my read report for the day. Again, man, I thank you guys for rocking out with me. We could just want to continue to get better and bigger and more knowledge, and get that knowledge out to you. Tell me what you think about the stream. Give me your comments, give me your questions in the comments. I appreciate good feedback and negative feedback. It's all about growth. And if I can do anything to help you, reach out to me as well. Again, I got my Discord coming soon. Hopefully it'll be out by the end of the year. And it's already out, but I just want to make sure it's beneficial to you guys. Also, I got Why Wait Start coming. It's a startup help group. to help people that's trying to start businesses. You know, that's always big during this time of year. People are kind of reflecting on what they did all year and trying to see how they can do it better, bigger the next year. And I'm here to help. So that's all I got, man. Like I said, check out my affiliate links in the description below. A lot of good things for you. If you're looking to trade crypto, I talked about crypto yesterday. I'm not going to go into it today, but if you're looking to trade crypto, one of the affiliates that I'm with is btcc.com. They allow you to trade crypto up to 500x. So you can turn your little money into big money, or you can turn big money into no money. I mean, beware. You know what I'm saying? Like I said, I'm not a financial advisor. Make sure you consult and make sure you got that money to spend. Don't invest anything that you're not willing to lose. But with that said, this was your report for today, and I'm out. Peace.